Hey everyone, and welcome back. If you're a first-time home buyer in Canada, you've heard of the mortgage stress test. And let's be honest, the name alone is stressful. It's the single biggest obstacle stopping many Canadians from qualifying for the mortgage amount they need. But what is it, and how do you beat it? Today, I'm breaking down the Canadian stress test, the B20 guideline, so you can understand it, prepare for it, and most importantly, pass it to get the home you want. Let's get started. So, what is the stress test? Simply put, it's a rule imposed by the federal banking regulator to ensure you can still afford your mortgage payments if interest rates go up. It's an insurance policy against your future financial distress. Here's the rule: when the bank assesses your application, they don't use the actual rate you sign up for. They use a higher, qualifying rate, which is the greater of two numbers, your contract rate plus 2 percentage points. The Bank of Canada's benchmark rate. They use that higher qualifying rate to calculate your theoretical monthly payment. If your income can support that payment, you pass. If it can't, you don't qualify for the full amount you requested. The real impact of the stress test is that it slashes your buying power. Let's say you're approved for a rate of 4.5%. The bank has to qualify you at 6.5%. That 2% bump can cut your maximum approved mortgage by 15% to 20%. For a family pre-approved for a $500,000 mortgage, the stress test might effectively shrink that to just $400,000. In a market like Toronto or Vancouver, that difference is huge. So how do we push back against the stress test and maximize your borrowing power? There are two key areas you can immediately improve to increase your chances of passing. Action 1. Optimize your debt load. The stress test is all about your debt service ratios. Every single monthly debt payment, credit card minimums, car loans, lines of credit, is penalized heavily. Before applying, focus ruthlessly on paying down and closing those debts. Lower monthly debt means better ratios, which directly translates to a higher potential mortgage approval under the stress test. Action 2. Maximize your down payment. This is the simplest way. The more you put down, the less you need to borrow. A smaller required loan amount is much easier to qualify for under the stress test. If you're near a milestone, like hitting the 20% down payment mark, it can drastically improve your chances. Remember, for first-time buyers in Ontario, there are specific rebates that can help free up cash for this. Now for the professional secret: work with a mortgage broker. Why? Because the stress test forces banks to be conservative, and not all lenders are regulated by the same federal rules. As a broker, I shop dozens of lenders, including federally regulated banks, credit unions, and alternative lenders, all with different criteria. I can find you the best combination of rate and terms that allow your application to qualify under the stress test. Sometimes, finding a slightly better actual contract rate is the trick that pushes your ratios over the finish line. Don't limit yourself to just the rates your bank wants to show you. The stress test is here to stay, but it doesn't have to crush your home buying dreams. Knowledge is power, and strategy is key. By cleaning up your debt, maximizing your down payment, and using a broker to shop the entire market, you put yourself in the strongest position possible. Ready to strategize how to pass the stress test and qualify for your dream home? Click the link below to visit LiveRate.ca and get a personalized, stress test-proof qualification review. Like, subscribe, and hit the bell for more Canadian mortgage tips. See you next time.